Bitcoin halts at 73K and plunges to 66K, big players seem ready to move. With meme coins receding and the DeFi market falling, where is the new narrative heading? Stablecoins become the new darling of the whales, unveiling the financial giant's secret strategies. BNB Chain throws millions of dollars, igniting the crypto circle with a meme coin developer competition. With Spot, Bitcoin ETF trading breaking the $100 billion barrier, ARK's ARKB becomes the focus of a counterattack. Bitcoin mining company Bitfarms prepares ahead, upgrading mining rigs to ensure profitability post-halving. Remeasuring the world with cryptocurrency, mastering the 24-hour wealth code, let's get rich together.
On April 4, Thursday, how is the crypto industry? I'm Zhu, the spend output profit ratio SOPR for Bitcoin holders, an indicator measuring the profitability of Bitcoin transactions. When the SOPR value is above 1, it indicates that investors are profiting by selling Bitcoin. Below 1 means selling at a loss. Currently, the SOPR value for short-term holders has slightly dropped below 1, indicating that those holding Bitcoin for less than 155 days bought at higher costs and are quick to accept losses once prices fall. However, since Bitcoin surpassed $62,000, the SOPR value for long-term holders has skyrocketed, reaching the high range of 5.5 to 5.6 multiple times. And even with a nearly 10% drop in Bitcoin's price, it still hovers around 2.3. This shows that long-term investors are selling at high profits. Therefore, with Bitcoin halving imminent and the possibility of the Federal Reserve cutting rates in June, Bitcoin's short-term market might have another 2 to 3 months left. A significant correction might occur then, followed by a wild bull market in Q4 2024 and 2025. Recently, the Bitcoin spot ETF finally warmed up, only to be hit by news that cooled the market again. Yesterday, we mentioned that the US government moved the 31,800 Bitcoins to new addresses, with no signs of these Bitcoins flowing into exchanges for now. However, there are reports that the US government has already sold these Bitcoins through over-the-counter transactions, deliberately transferring 2,000 Bitcoins to Coinbase to openly remind the market that we have sold some of our Bitcoins. This potential selling pressure from the US government directly dampened institutional sentiment. Additionally, FTX expects to fully reimburse its loss-suffering users by the end of 2024, but the issue of about 138,000 Bitcoins from the Mt. Gox event hangs over like a sword. When will the compensation start? This is a point worth paying attention to. Currently, $73,000 seems to be a hurdle Bitcoin can't overcome. If it does, a new round of wild bull market might be triggered. In the past week, the TVL in the DeFi market has fallen from 100 billion to 95 billion, a sharp decrease of 5 billion, significantly affecting the wallets of many meme coin players. Solana, Arbitrum, and Ethereum have all seen significant reductions in their TVL, while only Binance Smart Chain and Bitcoin Chain saw a slight increase. The market's enthusiasm is still mainly about the base chain, but there has been a clear trend towards the Binance Smart Chain and Bitcoin Chain. The Bitcoin halving at the end of April, as well as the unlocking and redemption of Merlin's staking, will determine whether it's a fortune or a loss. If a new wealth effect is created, then it's expected that the Bitcoin Chain and Merlin will ignite the market sentiment once again. Remember to spend a little money on lottery tickets by then. You might just hit the jackpot. The recent market has belonged to stablecoins. According to data from blockchain analysis company Sentiment, whales have been rapidly accumulating stablecoin supply. Here, whales refer to investors holding at least $5 million in crypto assets, which can be considered as giant whales. They have purchased about 5% of the major stablecoin supply in the past 3 weeks. What is the reason behind these financial giants' favoritism for stablecoins? Let's unveil this mystery together.
In March, stablecoins pegged to the US dollar rose from $143.3 billion to $151.4 billion. The total market capitalization of stablecoins grew by over $8 million, with USDT seeing a 6.3% increase in March supply, USDC growing by 13.1%, and DAI experiencing a slight decline of 1.7%. Athena's USDE saw a staggering 194.9% increase in supply this month. Stablecoins that whales accumulated include USDT, USDC, BUSD, DAI, TUSD, and USDP. Charts indicate a recent sharp increase in the percentage of these assets held by whale entities. This phenomenon typically occurs for two reasons. First, there may be new large funds choosing to enter the market through stablecoins. Secondly, whales are selling assets with higher volatility in the industry, such as BTC, in search of the security provided by assets pegged to the dollar.
Firstly, we cannot ignore the influx of new funds in the cryptocurrency market. Stablecoins are often seen as a bridge for new money entering the market. Compared to more volatile assets like Bitcoin, stablecoins offer relatively stable value, providing a safer haven for investors. Therefore, when new large funds want to enter the market, stablecoins naturally become their first choice. However, the influx of new funds alone does not explain the whale's massive increase in stablecoin holdings. It could also be due to selling Bitcoin, but we see that the recent BTC accumulation from whales is quite strong, meaning a bullish portfolio has already formed because the rise in stablecoins is not just because whales are reshuffling funds from BTC to stablecoins, but comes from actual inflows of funds. As the meme projects on the Solana and Base blockchains continue to heat up, meme trends have moved beyond just a fleeting hot topic to become a continuous main theme. Following the past popularity of doge, frogs, and various other animal meme coins, cat coins have started to be strategically placed in the field. 2 days ago, a new meme coin named halts, named after the cat owned by a Solana community influencer and trader Ansem, skyrocketed to nearly $100 million in market value within the first 24 hours of its launch. At 4 a.m. yesterday, halts' market value once reached $98 million, with a 24-hour trading volume of 145 million. It's said that meme coins experience significant volatility and high risk, but historical bull markets have shown us that there's always a place for an animal series in every 100-fold coin. This alone has attracted countless traders. In the depths of cryptocurrency world, a unique meme coin developers contest is quietly stirring up a frenzy. As a battleground for public chains, meme coins have now become a focal point for various forces. And now, BNB chain has recently announced that it's going to make a big move.
BNB Chain recently announced the launch of a meme coin development competition on the BNB Chain with a prize pool of up to $1 million. According to the official announcement from BNB Chain, meme coin developers must register before April 9th, with the competition taking place the following day. Finalists and winners will be announced approximately 1 month later, with rewards distributed over the subsequent 3 weeks. The final prize amount will be determined by 50% of the total trading volume of eligible meme coins during the competition period, 40% by the number of holders, and 10% by market capitalization.
The contest is like a crypto version of a meme coin carnival, not only providing developers and creators with a platform to showcase their talents, but also giving them a chance to win substantial prizes. For participants, this is undoubtedly a rare opportunity. However, before this, the Avalanche protocol also announced that it would purchase selected meme coins on the Avalanche chain through its Culture Catalyst program to recognize and encourage the culture and fun represented by meme coins. However, this move seems to have attracted little attention from the crypto community, having minimal impact. It remains to be seen how effective BNB Chain's effort will be. Since its launch on January 11th, the American Bitcoin Spot ETF has rapidly become the second largest single commodity ETF in the United States, becoming a critical reference for investors interested in Bitcoin buying activities. In this battle for ETF dominance, ARK Invest ARKB has made a remarkable entrance, surpassing the veteran giant GBTC in net capital outflow for the first time and becoming the center of market attention. Given that GBTC has always been favored in the market for its large scale and stable performance as the leading Bitcoin ETF, ARKB's comeback represents the rise of new forces and injects fresh vitality into the entire cryptocurrency market.
Reviewing data from March, the trading volume of Bitcoin spot ETF surpassed $111 billion, nearly 3 times the volume seen in February and January. BlackRock's Bitcoin spot ETF IBIT had the highest trading volume, accounting for 49.13% on March 28th, surpassing Grayscale's GBTC at 20.41%. ARKB, managed by ARK Investment, ranked third with a 6.13% share. Looking at the outflows from Bitcoin spot ETFs yesterday, ARKB saw outflows of $87.5 million, equivalent to about 1,300 Bitcoin, surpassing GBTC's $81.9 million. Currently, GBTC remains the largest in terms of assets under management among ETFs, exceeding $21.68 billion, higher than the second largest IBIT with $16.95 billion, while ARKB ranks fourth with $2.86 billion in AUM.
I guess what we were hoping is that as GBT was ceding share, that we would be among the top three, because we believe that three ETFs ultimately will win.
Initially, the ETF competition was expected to be between Grayscale and BlackRock, but ARK's ARKB quietly impressed everyone by surpassing GBTC in net capital outflows, becoming a new favorite in the market. However, ARKB's success is not accidental. Its ETF's product design and investment strategy have unique advantages, better meeting investors' needs. Of course, this battle for ETF supremacy is not without challenges. Despite recent outflows, GBTC, as a veteran giant, still leads significantly in asset management size, demonstrating its strong market foundation and influence. Emerging ETFs like ARKB also need to continuously develop and improve to win more market share in fierce competition. At the end of April, Bitcoin will undergo its next halving events. Currently, Bitcoin miners receive a reward of 6.25 Bitcoins per block mined. After the halving, this reward will drop to 3.125 Bitcoins, and the supply of Bitcoin will also be halved. Recently, Bitcoin's price fell from 72,000 to the current 66,000 USD, leading to nearly 120,000 investors being liquidated. As many hesitate whether to invest or not, Bitfarms, a Bitcoin mining company, announced a nearly $240 million investment in upgrading its Bitcoin mining equipment to remain profitable after the Bitcoin halving in 2024.
Bitfarms, headquartered in Canada, was founded in 2017. As of March 31st, Bitfarms held $66 million in cash and 808 Bitcoins, valued at $66,000 per Bitcoin, totaling $531.96 million, bringing its total liquid assets to over $100 million. Bitfarms plans to purchase 88,000 high-efficiency Bitcoin mining machines, tripling its hashing power to 21 EH per second through equipment upgrades, aiming to increase operational capacity by 83% to 440 megawatts and improve mining machine efficiency by 40%. In March 2023, the company, with only 4.8 EH per second of hashing power, mined 424 Bitcoin, highlighting the importance of increasing hashing power to maintain profitability in Bitcoin mining.
We need to be very, very efficient, and that's what we've really driven our last 4 years towards.
Upgrading equipment to ensure profits is a strategy. I strongly agree with Bitfarms. The mining speed of mining rig or its computational power determines how many Bitcoins can be mined. The higher the power, the more Bitcoin mined, and the higher the return. Initially, about 50 Bitcoins were produced every 10 minutes, with the fourth halving happening at the end of April this year. The miner's reward will reduce to 3.125 Bitcoins. This serves as a reminder to miners to upgrade their low-power machines to high-power ones before the halving, to ensure profitability and gain more mining rewards after the halving.
Market data indicates that the total value locked TVL on the base chain bridge has surpassed 450,000 Ethereum, reaching 456,108 Ethereum currently, with a total user count of 488,278 on the bridged chain. according to Whale Alert Monitoring. The Tether Treasury minted an additional 1 billion USDT on the Tron blockchain 15 minutes ago. As of 2:20 a.m. today, the Bitcoin network has gone over 1 hour without generating a block. The current block height is 837,568, with a network difficulty of 83.13 TH. BCH has completed its block reward, having a block height 630,000 with the block reward reduced to 3.125 BCH. Data shows that the cumulative fee income generated from minting ordinals inscriptions, a Bitcoin NFT protocol, amounts to 6,432.5472 Bitcoin, equivalent to approximately $423,505,335. The current total minted inscriptions reached 64,139,724.
Human nature is all too similar. We love to chase rallies and flee at falls. Bitcoin, when it hits new highs, sees a rush of followers and a collective retreat when it falls. Bitcoin is a suitable asset for long-term holding as its value far exceeds its current price. Here's an example. On April 21st, 2020, in the early hours, the May delivery of U.S. crude oil futures fell to 37.3. An utterly bewildering trend, making oil barrels more expensive than the oil itself. Such an abnormally trending scenario presents the best profit-making opportunity for traders, as crude oil prices surged afterwards. So, no matter whether Bitcoin continues to adjust or not, it's advised to hold tight. Alright, that wraps up today's program. If you find our channel valuable, we welcome you to share, follow, and even join us as a member. Click on the top right to see our membership benefits. Our channel focuses on curating valuable news from the crypto, blockchain, and mining industry, with the news information from Monday to Friday and in-depth reports on weekends. You can gain access to our wealth code from Monday to Friday, as well as industry articles from our special authors. Let's get wealthy together. See you tomorrow.